How worried should investors be about an economic slowdown and the impact on corporate earnings? Well, at the World Economic Forum in Davos, Switzerland, we heard top executives and economists about the state of the US and global economy. Here's what they had to say.
If you look at the forecasts, probably a recession's more likely than a boom.
And so now their basic view is we dropped from the growth rate in the third quarter 4+ down to 1% annualized GDP growth for the first 3 quarters. That is a soft landing. It didn't go negative, but it landed and got near zero.
With higher interest rates, we can feel the economy slowing. That doesn't mean it's going down.
So as we heard there, a bit of a mixed bag from these experts, everything from a recession to a soft landing to perhaps just slower growth. So it just goes to show, obviously nobody has a really clear handle on this. So if you're an investor, I mean, obviously over the last year, everyone's been on that search for yields. So it appears to be the boring investment might be the one to make. It might be just the index funds, just sort of sitting and waiting out some of this volatility. It seems to be more about preparedness than really trying to make some of these predictions here, at least if you're trying to keep some of your returns safe versus sort of panicking at every data point that comes out, trying to predict a soft landing.
Yeah, CEOs not necessarily handing out investment advice over at Davos, Rachelle, but when you think about what we've been talking about on the show, this divide that we've been seeing between what Fed officials are saying and then the market expectation, you could argue the executives we heard from over in Switzerland are sort of somewhere in the middle. You just heard from some of those key executives Yahoo Finance spoke to this week. Jamie Dimon also saying he's a little cautious, quoting him specifically saying I think it's wrong to assume everything is hunky-dory. You heard David Solomon over at Goldman Sachs saying that this expectation of 6 to 7 rate cuts going into this year, not necessarily something that's on his radar per se, that he thinks he has a hard time grasping that. So it's sort of interesting to hear just this idea of executives also not necessarily seeing this clear path. I mean, we've heard from, the Fed officials specifically about how difficult it is to grasp where the economy is right now, just given how significant that run-up was in inflation. So, as you said, a bit of a mixed bag, but really interesting to get some color at the start of the year as we look to see where the Fed moves.